Good morning, everyone. Welcome back to Morning Markets, where the team at True Potential are discussing some of the key things that have happened in asset markets over the past 24 hours. Today, we'll continue to focus in on the changing market dynamics that we saw on Monday and how that fed into asset markets yesterday. Just looking then at the two major asset markets yesterday's equities and bonds, it was very much a continuation of the trend that we saw on Monday, with those areas of the market that are more value orientated, economically sensitive, or those that have been significantly impacted by COVID-19 restrictions such as travel and leisure firms continuing to perform well over the course of the day. And that was very evident in equity markets in Europe in particular, where we saw the FTSE 100 up 1.8% on the day, France 1.6%, and then a very strong performance coming through from Spain up 3.4% on the day. Markets that have been more impacted by current restrictions and also the restrictions earlier in the year. Turning then to the US, in the US market, a very similar picture. Where we saw both of the major indices, the S&P 500 and the NASDAQ, down on the course of the day. The S&P 500 down about 0.1%, so hardly falling at all. Contrast, the NASDAQ down about 1.4%. But digging into that a little bit more and looking at it at a sectoral level, very evident with the large cap technology names, the top 100 stocks in the NASDAQ down 1.7%, and within that the sub-index of the computer manufacturers and those related to computing and technology down 2.2%. Big contrast in the US yesterday between those equity markets was with the small cap. So we saw the Russell 2000, the index of smaller companies, increasing 1.9% in the day. And that's because economically sensitive companies are typically more small cap. They're more representative of what's happening in the broader economy and thus more aligned with ongoing economic improvement that may come as we navigate our way through COVID-19 and the opportunity that the vaccine disclosures represent for allowing economies to reopen, people to regain confidence, businesses to regain confidence, and that feeding through into spending, but also feeding through into investment. Sovereign bonds, they continue to see a similar move as on Monday, and that was with yields increasing. As yields increase, sovereign bonds fall in price. So yields on the US 10-year increased to 96 basis points. And over the course of the trading in Asia through the night and this morning, we've seen that continue to move out with the yield getting closer to 1%. And that would mark quite a historic moment in the sense of where markets have got to and where they're traveling back to. Just at the start of the year, the US 10-year was yielding 1.9%. Similar moves have been seen in other sovereign bond markets in developed markets where we've seen yields also move out. For example, the UK 10-year gilt has increased 14 basis points over the course of the month and is now yielding 0.4%. Just looking at some of the other things that we've been focusing in on today. In Germany yesterday, we had the ZU Economic Sentiment Index, and that unsurprisingly fell for the November reading. It fell to 39 from 56, very much driven by ongoing lockdown and the impact that is having on sentiment. I think the other major thing yesterday in Europe was just what happened with the EU, and we saw EU government members agree on their proposed budget for 2021 to 2027. That's important, but the major point of that is that it does free up the coronavirus relief program that we discussed during the summer, that 750 billion euro fund. That can now be discussed in much more detail, and then allocations of that start to be made over the coming months and into 2021. And that's important to support the Eurozone economic recovery at this point in time. Also in Europe yesterday, we just saw increasing regulatory pressure in some of the internet platforms, and that was primarily around Amazon. And that just brings us back to a point that we've discussed in the past, that these business models will be and have the potential to be impacted by regulatory change more than anything else, given the strong competitive position that they have been able to achieve through their reinvestment in their businesses and growing the footprint of their businesses over the past number of years. At the same time as we saw that in Europe, we also have seen similar moves in China overnight, where the internet platforms there have been started to be looked at in terms of their monopoly position and whether further regulation is required there. And that's quite a step change in China, not something that we've seen in the past, but it also just represents maybe a bit of the friction that appears to be existing between the internet platforms and the government at this point in time. If we cast our minds back to last week, we saw the initial public offering of Ant Financial being removed. Again, that was due to regulatory pressure. So that dynamic is just changing, and it has seen the Chinese internet platforms fall in equity markets today, and it also has, I think, impacted a degree of sentiment in the Chinese equity market this morning. That's it for today. Please join us again tomorrow. Many thanks.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.